one important thing is, and this is is that old chestnut, is should I fix my rates now, or have I missed the boat?
Right.
Now I have done plenty of analysis on this over many, many years, and I've never seen a period when fixed rates actually outperform variable rates. So if I take fixed rate today and a variable rate today, and I look at it over just performance over 5 years, variable rate always outperforms. In other words, you pay less interest over a period of time. What would you say to borrowers now who are sitting there with a variable rate or about to borrow money and they've got the option to fix it? What would you say to them?
And we have seen fixed rates go up. This stuff that we were talking about before in the US where bond yields, which effectively go into the pricing of fixed rate products, have gone up. They're anticipating rate hikes from the Fed in the US and even from our RBA, as we're saying. It's priced into the market. So some of those fixed rate products have already gone up in yield, in borrowing costs. A couple of things. And this is a personal decision rather than a financial decision.
It's an emotional decision.
It is. Now, if you want to be absolutely sure that your monthly repayments are going to be X dollars a month for 3 years, get a fixed rate product, and whether they go up or down, you're hedged, if you like. You've locked in your monthly dollar value of repayments. And if that's your personal desire, and I know I can pay X dollars a month, and I don't even have to worry about it. I'm not going to lose sleep overnight. That's an important thing. There are sometimes some hidden costs in that if you want to overpay, like you get, your old aunt dies and you inherit 50 grand or something and you want to pay it off your mortgage. Sometimes there's a penalty to do that. So they don't have the flexibility of a variable rate. Whereas a variable rate, right, yes, you do suffer the whims of capital markets and what central banks do. And while we're reasonably confident about our outlook for interest rates, sometimes something comes along. No one forecast coronavirus coming along and rates being cut 2 years ago. That was the factor X, if you know what I mean. So if you're happy to ride the risk of rates going up, but also possibly we might be wrong. There might be a geopolitical problem that sees the RBA never hiking this year.
There might be a war in Ukraine.
And you've locked in, yes, or Taiwan or something. Yeah. And you've locked in rates that are 50, 75 basis points above the variable rate. You think, oh my goodness, I've just cost myself a fortune. So, but if you're happy with that monthly repayment to be an exact dollar amount for 3 years, you're fixed. It's this dollars coming out of my paycheck every week, every month. I know that. Good. If you want the variability, or you think you're going to get a bonus, or you think you've got to get a bit of cash, and you can make a repayment against the principal on a variable rate, that flexibility is also worth something to a lot of individuals.
So my advice then, based on what you've just said, would be if you are nervous and you want some certainty, perhaps you should take part fixed, part variable.
Yes.
Just talk to your lender. I have a bit of each. I might 60-40 or 50-50, whatever the case may be. And you've got a foot in each camp, and it actually can help you sleep at night. But at the same time, if you want to make an extra payment, you can pay it off the variable part.
That component. And then when that rolls over in 3 years' time, you reassess.
Yep.
How much do I now owe? What's happened to me personally? I've got a promotion. I'm earning an extra 20 grand a year. I've got a promotion. I'm doing really well, whatever. My partner's earning more money, or, you've inherited something, whatever the case may be. I'll
reduce the variable.
Reduce the variable bit or something.
Yep.
You rework your strategy in 3 years. And as you said, in those 3 years, you don't worry too much about it. Because there's nothing worse than I've got this big mortgage. Oh, rates are going up. Oh my goodness, am I going to be able to pay an extra 1% on my mortgage repayments? That's stressful for some people. Others, they're happy to ride it out, or they've got a financial buffer. They can ride it out. So it depends on your personal circumstances.